And good afternoon. Welcome into Market Talk for this Friday, February 4th. Thank you so much for joining us once again, making us part of your day. I'm your host, Jesse Allen. And again, thank you for joining us. Find us online, markettalkag.com. That is our home on the web, markettalkag.com. Find all of our social media links there, all of our streaming sources, the latest news of agriculture, and much more. It's all online at markettalkag.com. Well, we wrap up the week with some good strength in the grain and livestock markets. Let's talk about all of it. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here this afternoon. Bryan, good afternoon to you, sir. Happy Friday. Taking a look at these markets today on the grain side first, I would just call it firm most of the day and found a little bit of buying strength here towards the
We
end of the
did.
session.
Yep, same thing we've kind of seen in a lot of days on this upswing here. Continued concerns about declining supply and availability of supply out of South America. We're still not seeing a big fix to the fertilizer issue. So corn ended the day 3 to 6 higher, with September leading today's rally. Beans another update there, 9 to 11 higher on the old crop. Continuing to push in new contract highs. Big changes for the week. Just real solid there. March corn. Um, Strong end to last week, tailed off a little bit this week, so the weekly change was down, but a good daily close. But over in the soybean complex, March bean closing 9 1/4 higher today, and that puts them at that contract at 15.53 1/2, also over 80 cents higher for the week. So big pickup in beans again.
Are you surprised by some of that money flow in here late today? Because it really felt and looked like a consolidation day ahead of the weekend and ahead of next week's WASD report.
Yeah, I think kind of the attitude that I'm guessing traders have today is, and I take that because I work with quite a few uh, people in the marketplace, producers, and I had some of them say, well, maybe I'll wait till Monday. They wanted to own. They said, you know what, let's just do it today because it might be up more on Monday. So I'm wondering if that wasn't kind of the mentality at the end of the day. The market wasn't breaking. It didn't
Mhm.
make a hard correction where you say, okay, I'll just kind of stay on the sidelines. It was showing that strength, and it's kind of, you better get on now because it's going to leave you behind if you don't. And that's really what's happened to the last. Let's put this in perspective. So on the March soybeans this week gained 83 cents. Jesse, last week gained 50, almost 56 cents, and then the week before that gained 44. So those are huge weeks. Those are the rare periods where you see in long-term historical charts where prices just go straight up. So they're factoring in something, maybe a lot of things. The dollar is down today. Export activity remains solid. We saw an announced sale again this morning. So somebody's covering these beans at higher prices. Destinations unknown, probably China. Um, so very interesting week. We had a very interesting weather week too. That maybe affected livestock a little bit more than the grain, but there was some limited movement of grain today and yesterday and all week in areas that typically don't get icy roads and then snow on top of icy roads, and
Mhm.
things kind of came to a halt in the central Midwest.
Very, very true. Staying on this soybean complex just a little bit more, we talk about South America and the production challenges down there. And I know we're going to get a little more of a clearer picture as we get into next week with the WASD report. Ultimately, it's going to depend on what comes out of the combines when they roll completely. But going into next week, we've seen a lot of private estimates really take a chunk out of Brazil soybeans. Do you think USDA is going to make that big of adjustment? Normally, they wouldn't.
I would, if I'm betting the answer is no. I think they acknowledge the declining crop conditions. You've got about 10% of the crop, maybe 15% harvested by the end of this week. So you get some harvest underway and you get your early results are kind of poor, but it's a big region, big country. I think the USDA was pragmatic last month. They went down to 139, US attache 136. A lot of private estimates really cranking this thing down under 130 now. Um, so I think the USDA will probably find a lower number. I don't think it's going to be to some. We've seen a few numbers talking 125, 120, things like this, where wow, that's a very very substantial downturn in expected yield. So, and in the middle of a weather market, you do get a lot of that type of stuff. So you got to take everything with a grain of salt.
I just wonder, depending on the number that USDA brings us, if they bring a bit of a surprise or whatnot. You mentioned it feels like maybe building in some of this weather premium ahead of the report here in soybeans, but just you laid it out the last 3 weeks. It's just been a parabolic move. I mean, do we think $16 on front months is out of the question here? I mean, 15.50 is a pretty strong range in these front months, and we're even 14 range on new crop.
Yeah, it's a huge range. It's strong. It's well overbought, but that's what happens when you get things that are affected by fundamentals. The technicals take a back seat. So the technicals indicate that, man, you've got a really strong upturn, big overbought market. And then you got this new crop here that might need to fight for acres. So one other thing to just kind of note this week, if you take the price of November beans and divide it by December corn, that ratio now is 2.43. So it's getting really close on the ratio to buying bean acres. We talked, several times over the last several weeks. Well, that may not matter as much when the bean price is, closing at 14 now. 14, it was 13, 13.50 when we talked before. And we said, well, dollars per acre really start to count. And then people talking daily, learning more about whether the availability and price of fertilizer for corn and nitrogen. So it looks like the bean market's really trying to buy some supply right now and buy some acreage. Um, and the ratio wasn't doing that. Now the ratio's doing it. So there's more of a compelling argument that long-term November beans will likely, assuming the second or assuming our crop is good and Brazil doesn't have a disaster with getting the rest of their crop in, um, that November beans, boy, much above $14, if they can score that, will be, a really high long time historical price, something to really, think about selling early on in the season.
Well, with this core market as well, just to kind of tie in here, we obviously talk about buying acres and this core market, trying to keep up with soybeans, but it feels like it's moving along at a much slower pace compared to the parabolic move in this soybean market. What do you think on the corn side here, Brian?
It is the percentage, corn, like I said, actually had a down week and soybeans had an up week. So
Yeah.
I think that tells you everything right there. You need to know that the market is factoring in the bigger concern for the world of market right now is the availability early harvest of beans and where they're going to come from. The second crop, bean crop, remains to be. I mean, second crop, corn crop. Keep on to say beans out of Brazil. You're just in the maybe even the early phase of planting of that. So you got a whole weather year ahead of that, or weather season ahead of that crop. And because of that, there's maybe enough expectation that the La Nina pattern begins to shift sometime here in February, March, and adds to the potential for bigger production down in that part of the world. Yet here in the US, as you talk to producers, you don't have to look very far on the drought monitor map, and boy, it looks kind of scary if this trend continues.
Well, talking that drought monitor map, let's go over to wheat a little bit. And, we got some moisture, as you alluded to, with the winter storm in parts of the plains, but overall, still dryness in the southwestern belt. And, looking at this wheat market as a whole, feels like we took a little bit of profit this week, but then a good close here today. So, I mean, what do you think in this wheat market overall?
Yeah, good close today. The wheat market peaked in November, and now we're into February. So we're working on really our third month that the market's peaked and really hasn't looked back. And it's got, by many accounts, a double bottom on the chart that may find support. I think you need to focus on just a number of things. One, the dollar, that's supportive. So we saw that maybe wheat went up on that today. Two, this whole Russia Ukraine, that tension seemed to, well, it seemed to ease this week and prices were down. Then maybe yesterday seems to be strengthening again, or the uncertainty of it all. You've got a lot of variables that are kind of in motion right now. But with the wheat market, I think really has been signaling that it's not ready to capitulate on near-term supplies or long-term supplies. They're lesser. We've got weather events. We've got acreage that really needs snow cover, really needs some good moisture in the spring. But it seemed like the sort of the more rational market, the participants are thinking, it's tough to kill a wheat crop. You got to kill it a number of times. Maybe that's why the overall trend for wheat is still down. But nice double bottom, nice pickup today, nice rally on the Kansas City contract, almost 17 higher today. So we're pretty pleased with today, but I don't think we've shifted sort of the idea of sideways to lower on wheat. That's still a historically high price for wheat in a world crop that doesn't appear like it's tighter, but it's not, Jesse, it's not urgent that it's going to run out of inventory.
I know you mentioned the weather as well. And I mentioned that with wheat. Let's move over to livestock. And yeah, that weather, this winter storm impacting some things in the plain states on the cattle front. Today, futures trade in cattle, we'll call it mixed. We've seen good cash cattle trade, though, this week, despite the winter weather. What's your thoughts as we wrap up the week in the cattle market?
Yeah, continued good demand underpinning the market. Unemployment numbers that remain, as expected, around 4%. You've got, this idea that let's hope it's right that COVID is abating and abating rather quickly in its numbers, so that we're not thinking isolation, a long term, shut down a restaurant, anything like that. So
Mhm.
I think if you looked at the positive cases this week, they're on the decline. You almost have an inverse relationship between cattle prices and COVID here lately, and I think there's some of that. The dollar dumping like it did this week, that's encouraging too for export activity. Um, you had a winter storm that probably limits some movement of cattle, maybe certainly some weight gain of cattle in areas where it's kind of sloppy and wet. That's just not ideal. So good underpinned market. Hog market's a good underpinned market. The dairy market continues to be very volatile but hold at high levels. You just got this big picture, strong demand, strong managed money pushing into a lot of commodities, high energy prices. And, maybe long term, the idea that we've kind of peaked supplies of a lot of commodities for some time, and it's
Mhm.
going to be a while before we start seeing the kind of the supply side take over again.
You mentioned the energies real quick. I just want to touch on that before we wrap it up. I mean, crude oil over $92 a barrel here. We're getting to some levels we haven't seen in quite some time. What's your thoughts on how that's going to parlay itself into our ag commodities here moving forward?
Well, obviously, it makes filling up any piece of equipment a more
Hmm.
expensive venture. So, I think what it does from the grain producer's perspective, I was at the Iowa Ag Expo this week, and there was sort of a rumbling in the crowd that this higher energy market just one more of these inflationary things. Why need high prices for my commodities? So they're not being encouraged by the marketplace to get over their skis and selling too much, either old or new crop, as you continue to see input prices rise. You take a look at, you said that energy complex crude oil over $92. Put that in perspective, over 92 and back on the week of the last week in November down to 62. So $30 increase, right? But 30 over 62, it's nearly 50% increase in 3 months. That's hugely significant to the bottom line.
Very, very significant to the bottom line. Brian, any other final thoughts you have real quick for us on this Friday?
Just people keep it safe if you're traveling in some of these nasty weather conditions out there. That storm went from southwest all the way to the northeast, so it engulfs a lot of people. A lot of volatility in the marketplace. Pay attention. Most of it's friendly right now and bullish. That all ends at some point, sometimes violently. So stay vigilant. Look at strategy. Keep in front of your goals, selling points, targets. Be disciplined on those. Could be a very good year in the year ahead, and it might be shaping up to be just that. So we don't want to fall prey to thinking the market has to go higher, do little marketing. It tips over while the input market continues to rise. That's a real negative recipe for success.
Well, I know if folks need some advice, they can reach out to you and the team there at Total Farm Marketing, totalfarmmarketing.com, or give a call 800-334-9779, can't they?
You bet. That's you got it perfect. Yep. And just everybody have safe travels.
Definitely. Brian, appreciate the time. Have a great weekend, sir.
My pleasure. Thank you.
Brian Doherty with Total Farm Marketing. And again, find them online, totalfarmmarketing.com. That's going to do it for Market Talk on this Friday, February 4th. I'm Jesse Allen, wishing you a great week.